Let's begin with the stock story of the day. Of course, that's NVIDIA and those better than expected earnings. Joining us this morning with his takeaways from the quarter, Morgan Stanley semiconductors analyst Joseph Moore has an overweight and just raised his target from 220 up to 235. Joseph, it's great to have you back. Thanks for being with us.
Yeah, thank you.
So much to unpack from the quarter. What is important to think about first?
Well, look, I think the demand commentary is very positive. They talked about the $500 billion number for Blackwell plus Rubin that they discussed at GTC a few weeks ago. That's a significant upside to potential numbers. I think you also see the Anthropic deal, the Humane deal, those are incremental to that. So very optimistic view of the revenue outlook from here. Just the nature of the numbers. I mean, you beat the quarter by $3 billion. That hasn't happened for a semiconductor company ever. They grew by $10 billion sequentially. That hasn't happened ever. So really robust growth, a lot of strength. Still some cynicism from investors about the sustainability of these investments. But, you know, personally, I think it's a very strong outlook for all of next year, certainly.
Right. You do point out that the fact that Jensen was willing to talk about the fears of an AI bubble and to talk about the fears of circular financing, that he took it head on, was a positive.
Yeah, 100%, I think. And, you know, the company has been aggressive about making investments into its customers and into various partners in the market. And I think they've talked about that. They've been transparent about it. They're enthused about the investments that they're making, and they're using it as a catalyst to grow the market. And I think the message that they have, which is that the spending so far is coming from some of the best capitalized companies that are out there, and the next wave of spending comes from kind of the new enterprises that are created around AI, it's a pretty bullish view of the world. And so I think, does it completely convince everybody about the risks that are out there? Not entirely. And I think that we still need to see how the next few years can evolve. But I think that really when you think about what's happening now, not this quarter, not the next quarter, but for the next few quarters, I think, you know, you are very well capitalized on that. I don't think any of these financing concerns, you know, are going to be an issue in that time frame.
So I guess my only question is, should the stock be up more? It's up less than 3%.
I mean, potentially, you know, it's been very surprising to me to see the stock be weak, really going back to the GTC event in Washington, D.C. a few weeks ago, where they first made these bullish long-term comments. We've seen the stock languish, and I think, you know, the stock is kind of fighting through a wall of worry about all of this. You've got competitive concerns. You have concerns about the sustainability of investments. And as much as the company kind of put a good answer to those questions, you know, I think you're seeing it take a while to convince people. And the stock has moved, you know, in step functions. And I think we'll probably see that down the road where, you know, we probably will see a bigger move. Right now, you're going through those anxieties, but, you know, a very strong outlook, a very good quarter, certainly the best quarter that we've seen from them in the last year. And, you know, to me, a very positive outlook from here.
But why do you think these names in particular are so hard hit? Because after that NVIDIA report, it seems like their businesses are solidified and some of these fears have been eased, at least for today, where we thought they were.
There's absolutely nothing wrong with NVIDIA. I don't own it, but I'll tell you, the growth is phenomenal. Total revenue growth of 63%. Data revenue growth 66%. Guidance is in the 60s as well. There's absolutely nothing wrong with NVIDIA. The problem is it's 7% of the S&P 500, very, very over-owned. Very well liked by the sell side as well. There's like 100% of the analysts have buys on this thing. So it is very over-owned. I'm actually intrigued that Broadcom has actually acted better today because I think it's a little less over-owned, but it's still there. It's still very popular. But the issue is it's the food chain. So NVIDIA obviously is the AI play, the pure play, and the technology side. So is Broadcom. So are a lot of technology names. But then you go and you look at data centers and the industrials that build out the data centers. They're getting hit. They reversed as well. So did the grid players, the utility players, and now the power companies, independent power producers are all down. They've all reversed as well. So it's like this knock-on effect. And I don't think it's the right action, to be honest with you. If it's because of Bitcoin and people are taking risks down, go to these quality companies that are not reacting to where numbers are going up substantially, where there's substantial buybacks and increasing of dividends, and the total addressable market is substantial as well. So I think you want to pick and choose. Do you want to do it today? I don't like the action at all. But I do think you want to pick and choose some of these companies. Every one of the names that you just mentioned, I think are buys here.
I mean, NVIDIA's numbers were great. Okay, they were great, period and stop. Why hasn't that been able to carry the market even higher? I do think there's other things at play that we as investors are hard to see, and I think this delevering in the yen and also in the still the wonkiness of the reverse repo market is adding to this negative sentiment across the market.
So, Joe, I want to come back over to you. Right now, we're looking at NVIDIA trading lower. And this is a question I've been asking since about 5 o'clock this morning. After this great report, do you buy more NVIDIA here? And now that it's pulled back about 0.5% or 0.75% based on the moves right there, is this a buyable place for NVIDIA? After that really strong earnings report that showed, at least for the near term, we're not in a bubble. Can you buy here on this very slight dip for NVIDIA or any of these other names on this dip?
As I grow older, I've become more and more confident that you have to have a process. And my process is becoming more and more rules-based because I think market structure dictates that. And I think you need to have discipline in a certain regard. I said to Scott several weeks ago, I would not, if you didn't own NVIDIA, I wouldn't be reaching for NVIDIA when it was 195-ish. If you were long, I would maintain your position. I would have rather have bought NVIDIA on a breakout above that new all-time high, which it did not achieve after reporting earnings last night and subsequent price action this morning. So I think I want to maintain that discipline. To answer your question succinctly, if you don't own NVIDIA, no, I don't think I would be buying NVIDIA exactly right here. I'd rather see some strength reflected with a breakout above a new all-time high. There's your confirmation. And if you don't own it, I would rather buy it there.
Yeah, by the way, JP Morgan out with a note today saying that retail investors, they bought NVIDIA every day this week going into earnings. Your point, Brent, I want to come back over to you. Your view on NVIDIA, the move it's making right now, the fact that it's moving lower after this blowout report. If crypto is a factor, if market sentiment is a factor, as Joe's saying, animal spirits leaving the market. How do you view this company right now today?
Yeah, I think from a stock price, we have to separate the company, which is crushing it, from the stock price. What I did actually is I had sold calls 2 months ago at 200 that expire on Friday. So I was able to close those out today with about a 60% gain. And then I sold calls again for January at 220 of so 2.5 months from now. I do think this $200 for NVIDIA is a ceiling. If it couldn't break through it today on these stellar numbers and all that Jensen talked about, his view of depreciation, his view of the partnerships, if it can't be a sustainable rally today, I do think that $200 is going to be a ceiling until, to Joe's points, we get some more animal spirits. And even then, I still think $200 is going to be a tougher spot for it to break through. So I will continue to sell calls and take advantage of that, while I think the stock could trade somewhat sideways.
Let's dive deeper, though, in NVIDIA and that share price reversal that we are watching unfold. The company boasted a bullish print. It calmed concerns around the AI trade briefly, and then things turned. NVIDIA is now down 1.5%. Bubble talk is back in the spotlight. Bridgewater's Ray Dalio says the bubble is about 80% inflated. Mohammed El-Arian writes that AI is in a bubble, but he also says, hey, maybe that's okay. Alphabet CEO says he's seeing elements of irrationality. And NVIDIA CEO Jensen Huang says he's seeing something entirely different. My next guest agrees. He says AI may actually be underhyped. CJ Muse is a senior analyst covering tech and chips at Cantor Fitzgerald. First of all, because we've seen this reversal, I got to ask you, is $200 the ceiling for this stock price?
Simple answer, no. But I do think that there are external factors. And I think earlier you cited the crypto sell-off down 20% in the last month. I think that's creating fears that go beyond crypto and de-risking elsewhere. But if I were to isolate to NVIDIA and what they projected last night on their earnings call, it was a great fundamental call. And I think that this is a short-term blip, but this is a broader market kind of focus, not NVIDIA specific in my view.
The earnings for NVIDIA, there was a lot here for investors to embrace. Not just beating expectations, but the implied guide of up 67% in data center revenues coming for January. That's got to be something you love. If the factors that we heard Jensen Huang lay out on the call yesterday, the optimism that he had for the space and for his company in particular, in spite of not doing the business that he wants to do in China? What can possibly move this stock higher? What's the catalyst?
Well, I saw the chart earlier with Walmart at a forward PE of 38 times. NVIDIA on this pullback is now trading 20 times what we think we'll earn next year, $9. So I think valuation will support it. I think from a positioning perspective, long onlys are underweight NVIDIA today. And so I think the realization over time that AI is not done will get investors in. And to your earlier question, will drive the stock, well above $200. Now, how do we get there? Gemini 3 was just released, and it's an excellent model. We've got Grok 5 coming first half 26. That's going to have 2 times or more the parameters. And moreover, these public models that we're utilizing aren't using Blackwell Ultra, and never mind Rubin, which will come next year from NVIDIA. And so I think we are on a very strong glide path for improvements to these large language models that will drive consumer adoption. And so I still think we're early, but it's going to take proof points on that front to drive that home. And we're firmly in the bullish camp, but it will take some time until we see that.
Very bullish. In fact, you keep NVIDIA as your top pick, put a price target on it of $300. Does the China factor matter?
Matters 100%. I think that you want AI to diffuse on a United States platform. And the embargo that we put in place is only going to create competition indigenous to China. And it's not like it's going to sit only in China. They're going to share that with their friends. And so we are hampering the platform for AI being United States to go global. And I really would hope that Washington, D.C. Would better understand what a negative implication that is to us, as a country.
Oracle and AMD were the first stocks today to start heading into the red. You've got Micron down 9% or so on the day. Talk to me a little bit about the concern that has started to fizzle up about financing and whether the debt about these data centers is just too great, too risky.
Yeah, I think when you look at it from a Microsoft or a Google or a Meta perspective, they have robust balance sheets and EBITDA and free cash flow to support the investments. On the other hand, you have emerging players like CoreWeave and Oracle and others, OpenAI, that just don't have, that balance sheet. And so they need to be creative with financing. And there is a desire on the part, particularly for an Anthropic or OCI, to become a hyperscaler. And so in that sense, they got to be creative. Does it create concerns? Sure. But do I view that as a real negative? No. I mean, I think this is how we'll get it done. And I would imagine that in the private equity world, deals like Brookfield, deals from Apollo, these will proliferate and support these underlying investments.
Give me a sense about clients, CJ, and whether they're feeling, we heard the traders on halftime talking about animal spirits and whether they've just left the building. Are people feeling optimistic and like it's still ready to chase the rally?
No, I think it's the opposite. I think positioning wise, we came into the report underweight NVIDIA. And I think the price action today, coupled with de-risking and what we're seeing in other risk assets, makes it difficult. I think very, very, very near term, right, to want to chase this. But I do think that we are going to get fundamental data points that will support the fact that AI actually is a moneymaker, and that these investments will persist, and that it is existential for the hyperscalers, and that we will see the investments that are underlying our estimates for NVIDIA hold through. And, the moment you find that intact, then, it'll be game on again. But, finding that precise data point is a bit challenging to nail today.
All right, I hope you're all doing well today and staying calm in this market. Let me quickly address what's happening in the market today so you know what's going on. Much of the market opened notably higher this morning following NVIDIA's fantastic earnings report yesterday. And then later in the morning, we got a lot of Fed speak. Morgan Stanley said they no longer expect a Fed interest rate cut in December. And Fed Governor Cook said she sees an increased likelihood of outsized asset price declines amid high valuations in stocks. That appears to be what sparked the market sell-off this morning starting around 10:45 a.m. Eastern. And then shortly after that, BLS announced in a statement that the employment situation for November 2025 is to be released on December 16th, which is after the next FOMC meeting. This caused market participants to worry even more that there may not be a December rate cut because perhaps the Fed won't have enough data to justify a rate cut. This sell-off had nothing to do with NVIDIA. It's just more Fed speak and worries about both employment and interest rates. If I'm being honest, I think this is all an overreaction to headlines with what appears to be inorganic price action. Just look at the price action of the SPY on the 5-minute time frame during the sell-off, and you'll see what I mean. Now, I want to cover NVIDIA's earnings again like I did in yesterday's video in case you missed it, so that we're all on the same page, because we learned a lot of important information on the earnings call. Also, I'll briefly mention that today there have been many NVIDIA price target upgrades following yesterday's earnings. I've already seen at least 15 price target upgrades just today, and that number will likely increase in the days ahead. Now let's talk about NVIDIA earnings. This was a very solid quarter with very strong guidance. Revenue came in at $57 billion, beating both the consensus and whisper numbers. EPS was $1.30, beating estimates, and non-GAAP gross margins came in at 73.6%. Next quarter revenue guidance came in at a very strong $65 billion, beating both the consensus and the whisper numbers. Guidance for next quarter non-GAAP gross margins came in at 75%. You may remember that early this year, NVIDIA told us that margins would move lower as they would speed up Blackwell production, and that margins would return to the mid 70% range late this fiscal year. NVIDIA is delivering on that promise. Jensen also said, quote, Blackwell sales are off the charts and cloud GPUs are sold out. Compute demand keeps accelerating and compounding across training and inference, each growing exponentially. Now let's get into some of the interesting details that we learned from the earnings call. I'm just going to rapid fire multiple points that stuck out to me because we learned a lot of important details across many different topics. First off, Rubin is on track to launch in the second half of 2026. NVIDIA addressed the concerns about GPU depreciation head-on, with CFO Colette Kress saying that A100 GPUs shipped 6 years ago are still running at full utilization today, powered by a vastly improved software stack. This is in full agreement with what I've been saying for the past couple weeks following Michael Burry's recent post on X. The hyperscalers are not extending the useful life of GPUs in order to artificially boost earnings. Rather, they have come to the realization that the useful life of the hardware is longer than what they originally estimated due to two factors: NVIDIA's continuous improvements of older generation hardware through software, and second, the world being compute constrained in the face of extremely strong AI demand. Those are the exact two reasons NVIDIA leadership gave as to why A100s are still running at full utilization 6 years after they shipped. This is not a bubble. This is insatiable demand. Developers will use whatever compute they can get their hands on right now, and that, in combination with continuous improvement of the hardware via software from NVIDIA, extends the useful life of the hardware. Ignore the noise. Now let's get back to the rapid fire of important points from the earnings call. NVIDIA expects input costs to rise in fiscal 2027, but they are working to keep gross margins in the mid 70% range. NVIDIA does not see an AI bubble at all. They see the complete opposite. Jensen was asked to clarify the $500 billion graphic he showed on stage at GTC in October, and it is exactly what I've been telling you. He meant there will be $350 billion in revenue over the next 5 financial quarters, and $150 billion worth of GPUs has already shipped. The $500 billion number is cumulative revenue through both 2025 and 2026. And on the topic of the $500 billion, NVIDIA CFO said, quote, the number will grow. Jensen also said that with each new generation architecture, NVIDIA's share in the data center grows. Jensen said that NVIDIA's GB200 and GB300 are substantially ahead of the competition on inference. Jensen told us that the GB200 has a multi-year lead on the competition when it comes to inference. Keep this in mind the next time you hear someone say that NVIDIA systems aren't good at inference, because they're actually the best on the market at inference and most likely will be the best for years to come. Jensen was asked if his views on custom ASICs have changed, and he emphasized that AI is incredibly diverse, and you want to system that can handle a wide variety of workloads given that AI is constantly changing. Jensen was asked about NVIDIA's methodology in choosing whether to do share buybacks or invest in other companies. Jensen said that NVIDIA will absolutely continue to do share buybacks, and he also emphasized that every single investment NVIDIA has made has been a strategic investment to expand the CUDA ecosystem. NVIDIA is not simply throwing money around. They're making strategic, very high probability investments. Jensen was asked how the large spending commitments from companies like OpenAI, Anthropic, and others will be paid for in the coming years. And Jensen reminded us that these companies are the fastest growing companies in history, and their revenues are growing exponentially. They will be able to make the investments as their revenues scale. Additionally, Jensen told us that many well-known large enterprise companies will soon start spending big on AI, which will help fund the build-out. Jensen also spoke about the importance of agentic AI at length. And CFO Colette Kress also mentioned physical AI, saying that physical AI addresses a multi-trillion-dollar opportunity and, quote, the next leg of growth for NVIDIA. As a reminder, I'm expecting a surge in compute demand fueled by agentic AI that extends well into 2026, and then I think the next major surge of compute demand after that will be fueled by physical AI. There's a reason why I've been pounding the table about NVIDIA's physical AI business in recent months, and Colette reaffirmed why on the earnings call. In her words, it addresses a, quote, multi-trillion-dollar opportunity. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business, and I don't think this is getting enough attention right now. But I think it will get a lot of attention in 2026 and 2027. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested, and NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform approach to physical AI, and they're embedding themselves as the underlying foundation supporting all of it. Over 2 million developers are already building on the NVIDIA robotics stack, and this is not getting enough attention. I continue to think that most analysts' long-term NVIDIA estimates are too low given what's ahead. Overall, this earnings report was fantastic, and the guidance was even better. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.